All right, so I have a story to tell you today. This couple came to me just last week, actually, about their mortgage renewal. And it was quite a concerning conversation that I had with them simply because their mortgage renewal is coming in at $1,000 higher than what they're paying now. So they gave me a shout. They said, Joe, is this what you're seeing across the board? Is this something that is normal? Should we look at changing banks or lenders? Because I don't think we can make this work. And it's obviously a very common thing I'm seeing right now. We've seen mortgage rates go up over the last few years. The Bank of Canada is constantly increasing interest rates, and inflation keeps and still is going high. So these clients essentially came to me, their mortgage payments going up by $1,000 per month, and they're really concerned. Their mortgage comes due in October, and right now it's February. So they have a number of months to put this together and make a plan. But what are they going to do? They have a $1,000 a month payment jump coming up. And both of them work. They don't have very many debts. But the thing is, even though they don't overspend and they keep everything in budget, they are going to be faced with a $1,000 payment increase once their renewal kicks in. And this is on a moderate sized mortgage. Can you imagine if this same renewal increase happened on a $1 million mortgage or a home that is over $1 million and the mortgage is over $1 million? That would be probably a $2,000 a month increase or more. I'm not going to take the time to calculate that right now, but the point of the story is these clients are worried and they're stressed out and they don't know what to do. So once I got in contact with their lender to see if this is actually true, that's actually happening. Their mortgage payment is going up by $1,000. So I'm going to talk about 5 different tips today on what you can do to get ready for your upcoming mortgage payment increase. Because if your mortgage is renewing this year, and there's over $250 billion in mortgages renewing this year in Canada alone, and you're one of these lucky families that has this mortgage renewal coming up, you're going to be faced with a payment increase. And are you ready for that? Do you have a strategy for this? Do you have a way that you're going to be able to handle this mortgage payment increase? A lot of families haven't even thought about it. The family I chatted with last week, they had not even thought about it. They thought they were in the clear because their mortgage is not very large. Their mortgage is around $400,000. And with the average home price in Canada now sitting at around $657,145, a mortgage of $400,000 is not unrealistic. So there's 5 tips I want to talk about today that can help you in this very exact scenario. And what I'll do is I'll talk about these tips and then I'll share with you what this family is going to do with their mortgage and how they are going to handle this $1,000 a month payment increase. Because if your mortgage is renewing this year, like so many Canadians this year, we need to be ready. We need to have a plan, and you need to be ready for that mortgage payment increase. So one of the first things I always talk about, tip number 1, is call your mortgage specialist or your mortgage broker. Whoever set your mortgage up at the beginning. I've been in business for 14 years. I like to keep in touch with my clients, but maybe you have a mortgage specialist that you dealt with at your bank. Maybe they've moved on, and if they've moved on, maybe you need to find someone new. Maybe they've been promoted. That happens a lot in the bank industry. But if you call your mortgage broker and explain the situation, they can look at your mortgage renewal, take a look and see, are the rates being offered market rates? That's a very important um, item. And can we get a lower mortgage rate with a different lender? These clients that are facing this $1,000 a month payment increase coming on their renewal this year, they have great credit, they have a great home, they have tons of equity in their home. Why should they be subject to a $1,000 payment increase? As a matter of fact, if you're renting in Canada right now, you're in a much safer situation than you are if you're owning a home. Because if you're renting in Canada, your rent can't go up more than the 2.4% that is uh, allowed by the Ontario government. But in this case, this mortgage payment is such a huge increase, it's not even funny. So once you call your mortgage specialist or mortgage broker, I always recommend a broker because a broker can actually deal with multiple lenders at the same time, including your bank. And it doesn't really cost you anything at all versus a mortgage specialist. Mortgage specialist, they work for that specific bank and no other bank. So they only can offer you products within that bank and much more limited selection. But what a broker can do is say, okay, well, the rate you're being offered, in this case, for my clients, the rate that was being offered was over 1% above the market rate currently. And that is actually a huge red flag. And I'm seeing this across all lenders and banks. The first offer that comes in the mail for your renewal is the highest offer that you will get in the entire process. As a matter of fact, if you call your mortgage specialist at your bank, you 9 times out of 10 will get a better rate just by picking up the phone. Now, how much of a better rate? Probably 0.1%. Is that really going to save you very much on $1,000 on your payment renewal increase? No, not very much. But in this case, the market rate was over 1% lower. So automatically, I know that as a mortgage broker, I can take their mortgage and move it to a different mortgage company, keep everything intact, have the new mortgage company pay for all those legal fees to transfer that mortgage over. And as long as they are willing to go through that, then we can save them just over 1% on their mortgage renewal. So I've calculated that. And in this case, for the clients that have their mortgage payment increasing by $1,000 a month, that's going to save them between $200 to $300 depending on the lender that they pick. So that is huge. To be able to go from a $1,000 a month payment jump to a $700 to $800 a month payment jump automatically right there, that happened just by a phone call. So that phone call, if you renew that mortgage for 5 years and you're paying your mortgage for 60 months, 12 months a year or 5 years, and you're saving, say, that $300, that phone call alone, $18,000 in payments saved. So that's your $18,000 phone call right there. So checking with a broker, number one, to see if there's any other offers out there and to see if what you're paying is market rates, or is the renewal offer that you're getting in the mail a piece of trash? Really, a piece of trash. So automatically we saw that the renewal offer that they got in the mail, that's $1,000 higher. It's a piece of trash. Their bank, their loyalty to this bank is worth nothing. Nothing at all. The bank is really taking advantage of a situation because really at the end of the day, Canadians know that mortgage rates have gone up. Canadians know that they are facing higher mortgage rates on renewal. But what they don't know is that banks give you the worst offer on your renewal offer. And if you take that and if you sign that back, you're leaving money on the table. And as a mortgage broker, I hate that. I hate the fact that people leave money on the table when they sign the renewal without even shopping around. So, first tip, make that phone call. And if you've made that phone call and you've saved money already, good for you. You've done tip number one. All right, say if you're saving $200 to $300 on that $1,000 a month jump, you're actually not going to, you're still going to have a $700 to $800 payment jump. So if that happens, then what other things you can do? You can actually ask your broker to look at re-amortizing your mortgage temporarily to give you some payment relief. And I'll explain a little bit about how this works. If you take out a mortgage when you buy a home, usually you amortize your mortgage, which means the life of the mortgage is between 25 years and sometimes 30 years. In very few cases, there are lenders that go up to 40 years, but we're not going to talk about those mortgages. So say you took a mortgage at 25 years, you've been paying it for a number of years, and you're now down to 15 years. If you're renewing your mortgage, your renewal will be with the mortgage being paid off in 15 more years. So if you're facing the same thing as my clients were last week, that $1,000 a month payment jump, then what you can ask your broker to do is to re-amortize your mortgage from that 15 years remaining back to the 25 years remaining. And you do this temporarily. You do this for the short term. And what this is going to do, it's going to give you huge, huge payment relief. Not only will you get a better interest rate, but you will get payment relief by spreading those payments out for longer. And you may be thinking, why would I want to take longer to pay off the mortgage? That's not what we're doing here. We're re-amortizing for the short term during this period where rates are extremely high. Rates haven't been this high since 2001 in Canada. That's over 20 years ago. So if we re-amortize your mortgage, which we can include in that mortgage renewal transfer, with the new lender paying for all the fees to transfer your mortgage over so it doesn't cost anything, then you're going to have a much lower payment. As a matter of fact, your payment will go down another $300, maybe $400 just by going from 15 years to 25 or 30 years. And then what we'll do is we'll renew your mortgage into either a 2-year or a 3-year or a 5-year term to wait out this interest rate increase. And then once interest rates go back down, you can actually shorten your amortization back up. You can do that when your financial situation improves or when you feel comfortable with where rates are, and you can take that lower rate down the road. But during the time of higher rates, you take that longer mortgage period just to get you through. And you can always make extra payments on your mortgage too. Don't forget that. You can always make extra payments. You can do an additional payment. You can increase your payment. You can do a bulk payment. All mortgage companies allow that. Some allow 10%, some allow 20%, some in the middle. So you can always make those extra payments that you would have made, but the minimum payment we can decrease. So tip number one is to call your broker, see if the rate that you're being offered is the best rate. In this case, it was not. My clients that were facing a $1,000 mortgage payment jump, their interest rate being offered was over 1% above what is currently being offered. Second tip is to re-amortize for the longer period, and that would essentially lower your payment further. And not for everybody, but for a lot of people right now, that's the way to go, because it's hard to find an extra $100, $200 alone in your budget, let alone $1,000. So those are the first two tips. Now I'll get into tips 3, 4, and 5. And these tips are going to be less favorable than the first two. The first two are easier. The next three, they're the hard tips. And I've been seeing a lot of families do this too. If this is one of your tips that you are taking action on this year or next year, or have already taken action on, feel free to pop in what you've done below. So first tip, call your broker. They can get you a better rate on your renewal, because the first offer from your bank is always the worst offer. Second tip would be to increase the length of your mortgage just temporarily so we can get through this higher interest rate slump. The third tip now on how to handle a higher mortgage payment on renewal. If you're facing the same thing like my clients were, having a $1,000 payment increase, that is terrible. That is very unfortunate. And it is very common right now across Ontario, Canada. And if you're just joining me now, if you don't know who I am, I'm a mortgage broker with 14 years experience in Ontario, Canada. Never too busy to help you with your renewal. But getting into tip number 3 would be to rent out part of your home. And you can do this in one of a few different ways. If you don't have a secondary suite, a legal suite, you can rent out bedrooms in your home. I've seen my clients do this. It's obviously not the best way to go, but bedrooms can rent out for $600, $700 a month right now. That could cover, one bedroom being rented out could cover that entire mortgage payment increase for your mortgage renewal. It's not ideal, because obviously someone's going to share the space with you. But maybe you get a student in. Maybe you're in a college town. Maybe you're in a university town. Or if you have a secondary suite or an unfinished basement or a big garage that you're not using, you can actually turn that into a secondary living area. It's going to take an investment, but if you have a line of credit or savings or something like that, you can actually use that to do renovations into your home and put in a secondary dwelling unit. And then these secondary dwelling units, they're renting for $1,500 to $2,500 a month, depending on how big they are. So not only will this amount cover your mortgage payment increase, in this case, my client's facing a $1,000 mortgage payment jump, but this will actually give you extra funds at the end of the month to be able to either put into savings, or to pay off your mortgage faster, or to put towards that line of credit that you took out to fund the renovations. And the good thing is that normally, if you do these types of renovations on your home, in most cases, it will actually increase the value of your home as well. Because not only will you have your home that you could sell, but you have an accessory dwelling unit, which any prospective buyer can then take that income and help qualify for that home you have when they go to purchase a home like yours. So that's 3 tips so far. Tip number 1, call your mortgage broker, because usually the first offer that you're being offered on your mortgage renewal is trash. It's the worst offer, and they can already save you some good money when you come to your renewal. Second would be, when you're renewing, re-amortize your mortgage to a longer time period. This will give you some mortgage payment relief, and you can always shorten your mortgage back up down the road when your income situation improves, your financial situation improves, or the interest rates go down and that improves. You can always do that, but re-amortizing you can only do on renewal, and that's without any fees. You can re-amortize in the middle of the mortgage, but that's going to cause a penalty, fees, legal fees. You don't want that mess. All right. What's tip number 4? Tip number 4. So if you don't call your mortgage broker and you don't re-amortize your mortgage and you don't rent out part of your home, then I would suggest renewing for the shortest term, whether that be 6 months, 1 year, max 2 years. That will give you some time in the higher mortgage payment that you will have to live with. And you can do that by getting, I don't know how you're going to do that. $1,000 a month is huge. But finding $1,000 a month for 1 year is a lot easier than finding $1,000 a month for 5 years. And then hopefully you wait out the storm. Hopefully rates come down a little bit more in a year. You renew again then. A little bit more in a year. You renew again then. But renewing every year, a lot of people do that. And it's not a bad thing. And renewing for the short term can give you some peace of mind that you're not stuck in this situation where you're paying $1,000 more for 5 years. So that's tip number 4, is renewing for the short term. And you can actually take your mortgage and combine all these tips together. You can transfer your mortgage from your current company, renew into a shorter term mortgage at the new mortgage company, and also re-amortize your mortgage at the same time. And then after the 1 year or 2 year renewal at the other mortgage company, you can then renew your mortgage again and shorten your amortization back up at the same time, getting you through that slump where your mortgage payment would have gone up. All right, so that's 4 tips so far. Number 5, tip number 5. This is the worst tip of them all. It's probably the least favorable. But essentially, what you would want to do in this case, if you don't want to call your broker, you don't want to re-amortize your mortgage, you don't want to rent out part of your home, and you're not willing to renew for the short term and face these higher payments for the short term, number 5, fifth thing you can do is sell your home and buy a lower priced home, whether that is a smaller home in your area and you downsize, or you move to a city that has lower priced homes. A lot of people right now work remotely, and what I'm seeing a lot of people doing is they either sell in Toronto and they buy in my city, which is Orillia, Ontario, which is a little cheaper, or they sell in Orillia, Ontario, and they buy in Sudbury, which is a little cheaper, or they sell in Sudbury and they buy in Thunder Bay, which is even more cheaper, and you completely uproot your life and you move to a different city. And maybe you can even buy your home in cash in this case and putting yourself in a much better financial situation that way. But the thing is, there are options. And selling and buying a lower priced home, or selling and going into a home that is in a different market, but the same type of home, but a lower priced home in a different market, could be a solution for you as well. So what are you doing on your mortgage renewal? How much mortgage do you have? Are you concerned as well about your mortgage? There's $250 billion in mortgages renewing this year. There's about $350 billion in mortgages in Canada renewing next year in 2025. So we're going to see a lot of renewals come up over the next 2 years. And there's going to be a lot of calls and clients similar to what I had last week, where their mortgage payment is going up by about $1,000. And these clients are going to have worries, and they're going to want to do something. And the point is, you want to get prepared. You want to get in front of this, and you want to tackle it head on. Because you don't want to be faced by coming to a mortgage renewal and seeing that payment increase and just it catching you blindsided. It's not the way to do it, and it's going to cause too much stress for your family. So I'm going to review these 5 tips again. And these are the same 5 tips I'm giving everyone, including the clients that came to me last week with their mortgage renewal, where their mortgage payments are jumping by $1,000 a month. Tip number 1 is to call a broker as soon as you get that renewal. and discuss, hey, is this the best rate out there? Because in this case, my clients were being offered a rate which was way higher than what is out there right now. Loyalty with the bank means nothing these days. The first offer on your renewal is going to be trash. Second, re-amortize your mortgage at renewal. Increase the length of your mortgage so that each payment is lower, but you're paying off your mortgage over a longer period of time. And the strategy would be to do this temporarily until your financial situation improves or rates go down, and then you can shorten that right back up. Number three, less favorable, but you rent out a bedroom in your house for $600-700 a month, and that would help with your mortgage renewal going up as well. Also, you can put in a secondary dwelling suite if you have a line of credit, or you can refinance. You can take some money out of your equity at renewal time and have some renovations done to your home to put in a secondary dwelling unit, increasing the value of your home and bringing in about $2,000 a month to help pay for the increase in the mortgage renewal, as well as the cost to carry the loan that you've taken out to pay for the secondary dwelling unit. Number four is to renew for the short term. Renew for a year instead of 5, so you're not faced with the $1,000 a month increase for the full 5 years, but you're only doing that $1,000 a month for 1 year. Then after a year, hopefully rates are further down. You can renew again lower at that time, but renewing for the short term would be the fourth strategy. And the fifth strategy that no one likes to hear, that some of my clients have done, is they've sold, say in Toronto, and moved up to a smaller town further north for cheaper. They're paying less mortgage, they're getting the same sized house. Maybe they have to drive to work longer, or maybe they have a remote job. One of those situations can pan out, but that can also help you with your upcoming mortgage renewal and getting yourself situated in a position where you're not going to be faced with financial hardship when your mortgage renewal comes up, because that is stressful for any family, and you don't need this unneeded stress. Groceries are already way higher than they need to be. Vehicles cost way more than they need to. And on top of that, just life and daycare costs and all that all add up. You don't want your mortgage going up if you can help it. I'm a mortgage broker in Ontario. If you need help with your mortgage renewal, I am actually never too busy to look at your mortgage. And if you want to have a consultation with me, feel free to reach out to me on social media or directly via email, or send me a text message. I can help you with your mortgage that way. And what I want to get into now, just for the last few minutes of my podcast today, is to get into some of the data on mortgages. If you're into data like I am, I did want to talk about some interesting data that can help you with your mortgage process and your decisions. One of those things is what's happening with fixed rates right now. Well, they've been actually trending down since October of last year. So fixed rates have been going down. So if you received a renewal in October this last year and you're renewing this month, you're going to see that rates are a lot lower now than they were in October. Inflation is still pretty high. We have inflation sitting at 3.4% in Canada. We did peak at an inflation rate at 8.1% in June of last year. So it has come down quite a bit. Actually, my apologies. 2022, 8.4%. So the inflation has been trending down, but still very high. And in the US, it's also been trending down. Now, what's happening with house prices? Well, with the Bank of Canada set to make another rate announcement on March the 6th of this year, house prices aren't really changing that much. Ever since August of 2023, house prices in Canada have really remained steady. they're around that $640,000 to $660,000 mark. They keep hovering in this mark for the average price home in Canada. So right now I'm seeing that the national average house price is $657,145 in Canada. That's as of the most recent data. And that is actually 2% higher than the prior month. So house prices did go up by 2% compared to the month prior in Canada. And this is partly to do with the fact that fixed rates did come down just slightly, helping those buyers afford a higher home price. And if you are looking to buy the average price home in Canada today with the minimum down payment, typically 5%, be a little bit more than 5% on the price of $657,145, but you're going to need a family household income of at least $140,000 to be able to get into a house that is that price. And the amount of cash you would need to get into a home like that is around $50,000, down payment, legal fees, land transfer taxes, all included. All right. So the last thing I wanted to cover off is, when are rate cuts happening in Canada? When's the Bank of Canada going to say, hey, time to lower the rates? Well, there's a lot of people saying that Bank of Canada needs to start lowering rates because of all these renewals coming up. And mind you, that could be true. But the thing is that we might have a situation where rates might not come down until 2025. And if that's the case, we need to get through this next year. And with that, we are seeing that rate cuts could possibly happen earliest late this year, but most likely 25, 26. And then how much are they going to come down? Benjamin Tal, which is an economist that is highly well respected in Canada, he's predicting a rate cut at the end of 2024, but he's always been very aggressive, and more rate cuts in 2025, but not a very aggressive rate cut in 2024. Not enough to make a huge dent in your renewal, especially for my clients. I can't believe it. Their renewal is causing their mortgage payment to jump by $1,000 a month. Again, I can't believe that, but we are looking at it. We're gonna put together a plan for them, and they are going to be able to get through this, because one thing that I like to do is, because I've been in the business for 14 years, I have clients that come back to me each time for their mortgage. I want to make sure that they are on a good plan where they can pay off their home in a reasonable amount of time and not be financially stressed about it. So if you have any questions, my name is Joe Bladdock. I'm a mortgage broker with 14 years experience financing real estate here in Ontario, Canada. I can help you with a mortgage anywhere, Windsor to Ottawa, or the GTA all the way to Thunder Bay. I'd be happy to help you, give you a consultation. And as a mortgage broker, there's huge benefits to using a mortgage broker. We work with all the lenders, including your bank, and we can set you up with a mortgage that suits your financial goals and your financial picture, and get you to where you need to be for the next few years here, whether it is locking in for 1 year, locking in for 5 years, or possibly locking in for 10 years. But right now I would not recommend it because rates are way too high to lock in for 10 years. So thanks for watching today. Please like, comment, share this video. If you know anyone that's coming up with a mortgage renewal, this video will be invaluable to them. It will really help them through this period, because mortgage renewals are causing a lot of financial stress across all Canadians. With $250 billion of mortgages renewing in Canada, it's going to be a hell of a year this year. So we'll see you guys all next time, and thanks for watching.